Hi, everybody, and welcome to the February 2025 Economic and Market Update presented by Commonwealth Financial Network. My name is Brad McMillan, and I'm Commonwealth's Chief Investment Officer. Markets rallied in January as improving fundamentals and a solid economic backdrop helped support stocks to start the year. The S&P, Dow, and Nasdaq all ended the month in positive territory following mixed results in December. Bonds were also up to start the year, driven by falling long-term interest rates. The story was similar internationally, as developed and emerging markets both rebounded following sell-offs at the end of last year. The rally was due in part to a weakening dollar. However, the rollout of tariffs at the start of February has pushed the dollar back up and may drive market volatility ahead. Other policy initiatives are also starting to affect markets, and this will be something to watch going forward. But while Washington and the new administration's policy initiatives have captured investor attention, the underlying economy and market fundamentals are still very positive. We're currently in the thick of earnings season, for example, and so far so good for American companies. Roughly a third of companies in the S&P 500 have already reported fourth quarter earnings, and the average growth rate stands at 10.1%, well above analyst expectations of 7.3%. Over the long run, fundamentals drive performance, so the strong earnings growth for the quarter is a good sign for investors. The solid earnings results were supported by a healthy economic backdrop as well. The December jobs report showed continued strong hiring with over 250,000 jobs added, bringing the unemployment rate down to 4.1%. The solid labor market in turn helped support consumer confidence, with retail sales and personal spending both improving. The healthy labor market also contributed to the Federal Reserve's decision to leave interest rates unchanged at their last meeting. This follows 3 straight meetings with cuts and suggests that the central bankers may well be more patient with any future rate changes. While the market rally and improving fundamentals are welcome, though, markets investors do face a number of risks ahead. Domestically, policy uncertainty remains the most pressing one. The rollout of tariffs on Canada, Mexico, and China this week is a prime example of the impact that policy decisions can have on markets. Looking forward, market volatility is quite possible. And this is on top of the risks we've already been dealing with, such as the ongoing conflicts in Ukraine and the Middle East. There's a lot to pay attention to. But despite all this, on the whole, we are still in a relatively good place. The economic and market fundamentals continue to show signs of solid growth. And given the supportive economic backdrop, the most likely path forward is for future economic growth and market appreciation. While more volatility is certainly possible, the strong backdrop should cushion any impact. And that's not a bad place to be. That's it for this month's update. Thanks for watching. Please join me again next month for the latest news. And in the meantime, stay safe, stay sane, and stay healthy. And have a great month.